The San Francisco market is slowly becoming a buyer's market. Is the rest of the peninsula next? Coming up on the Silicon Valley Snapshot. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the second week here in August of 2020. Oh my goodness, we're so far into the year, it's insane. And it feels like August is going by especially fast. It's weird. But before we get into the data, before we get into the numbers, if you are a home buyer in today's market and you're looking for data reports very similar to what we're sharing for the specific neighborhood that you're buying in, go ahead and text the word data plus the zip code or the neighborhood or area that you're looking in, and we will get you a comprehensive report for the area and or areas that you're searching in. And if you're a home seller in today's market, go ahead and text the word data plus your property address for a very robust, in-depth analysis of your property's value. Not only that, so we gave you all the data that you see here and plus way more. It's like Altos and Trend Graphics and all these different sources. But what we will also get you is different pricing strategies, because right now pricing strategies are crucial. We'll give you a case in point. I just put a listing on the market last week. It was expected to sell for about $1 million, but because of the way that we priced the property, given the market conditions, I coached my sellers. They listened to me. Good things happen when you listen to Danny Gould. We ended up getting them over $200,000 over asking price. I can't disclose the final price because we're still in contract, but it was well over $1.1 million, and it should have sold for around $1 million. Good things happen when you listen to Danny Gould. Anyways, guys, let's get into the numbers and the data. It's amazing how many derogatory pieces of real estate news there are right now, specifically in San Francisco. And let's be honest here, San Francisco was hanging on by a thread pre-COVID, and ever since COVID hit, we've been in a really dire situation in the San Francisco market, so much so that it is, based on all the information that I'm seeing here, practically approaching, well, it's definitely encroaching on neutral market territory, and by many measures should, if things continue, it should approach buyer market territory here very soon. So an amazing question to ask is, will we ever go back to normal, especially in San Francisco? Hard to imagine that if a percentage of the would-be renters there no longer need to live right next to their, right next to their work. I don't know. The answer might be no. The answer might be that it may never return to where it was, or the path to recovery will be long and arduous. But let's get into the numbers here in the San Francisco market. I'm gonna put this slide up right now, and you're gonna go, wow. The discrepancy between inventory and sold listings is drastic. So much to the point where it's not even like the demand isn't there. You look at the demand, we're up 62% year over year, month to date. If you look at the bar graph down there, or the data table, we're up 190 units pending versus 117 last year. Look at the number of homes on the market, though, 1,500 in comparison to 495. That's a 3x the amount of homes on the market right now. Insanity. I don't know what I was trying to say there. What I'm trying to say is that is not good if you're a seller in San Francisco right now. And with so much inventory on the market, it begs the question, what is that going to do to prices? Well, prices are already dropping, period. If we look at the absorption rate too, the absorption rate graph here, it shows obviously in April, when things really hit, we had an absorption rate of 27.9%, which is neutral market. If you are new to the Silicon Valley Snapshot and haven't watched these videos, absorption rate, quick 10-second synopsis, is how much of the current inventory is being absorbed by the buyers, right? And it's measured as a percentage. However, this right here, what you're seeing right here is absorption rate based not on closed sales, but on pending sales, because pendings give us a little bit more of a lead metric as opposed to a lag metric. Closings, it's in the past, right? Pendings happen right now, so it's measuring what's the active environment looking like today. In July, it was a 36% absorption rate. Anything above a 33% is considered seller's market, but given the drastic change, there's one thing to consider here, right? There's one thing to talk about theory, right, and economic theory and definitions. And then another is to actually talk about feeling and environment and how things, the perception of things given the current market situation versus where we were a year ago. Because we can be in a seller's market, and I've seen it here many times in Silicon Valley, where we are in a seller's market, okay? But everyone around me says we are in a buyer's market, and want to know why? Because perception is everything. If homes take a month to sell, as opposed to 7 days like they normally do, well, yeah, the perception is going to be that it's a buyer's market, but that is not the case. A buyer's market is where we have 3 to 6 months of inventory or more, right? A buyer's market is where we have more than 6 months, over 6 months of active inventory on the market. And we're nowhere near that in any market right now. But perhaps it's time to, and this is a topic for a separate video, but perhaps it's time to revise the definition of a buyer's market, given the way the internet has revolutionized the home buying process. You know, these statistical definitions, these, you know, economists' definition of a buyer's market versus a seller's market are based upon you know, a lot of things that were happening before the internet was even around, right? Like, it used to take longer for buyers to become aware of property. It used to take longer to close, right? And so these things all played into the statistical definitions or the economic definitions of a buyer's and seller's market. I don't mean to bore you guys. Let's move on. But bottom line is that, for all intents and purposes, I'm comfortable with declaring San Francisco to be officially a buyer's market, even though the absorption rate says that it's not. And if you want to argue with me, feel free to do so in the comments. It seems like I'm irritating a lot of people these days. And for that, I say thank you. Thank you for leaving your comments down below and making your voice heard. Because without a little healthy back and forth, without a little healthy debate, why do these videos even exist, right? The point is to get you to think, and get you to think critically about the situation that we're in right now. When we look at the rest of the Bay Area, however, the story is the complete antithesis of what's happening in San Francisco. And the reason is, and I'm sure that this makes sense to a lot of you, San Francisco was the mecca for post-grads that are in their first 5 to 10 years out of college. They're dating, they're getting, you know, weird and stuff and doing those, you know, weekend things and everything. And then they go back to work the next week and they're, you know, a BART ride away or a scooter ride away or a non-car ride away from the office, right? Well, COVID hit, right? And it completely derailed the allure of San Francisco. Other areas do not necessarily have that same problem. There are micro pockets in different parts of the Bay Area where that is still the case. Where that is also the case, you know, very similar to what's happening in San Francisco. However, for the most part, we're seeing other areas in the Bay Area thrive, not because there's this huge surge in demand, but because of the lack of supply. Look at what's going on in Alameda County. So we posted up here. You see, since COVID hit, since April, we've had month-over-month growth in the absorption rate to the point where absorption rate right now for residential property is 123%. Flip to Santa Clara County. We see the same rise, 44 to 71 to 90 to 94. 94% absorption rate, crazy. Then we go to San Benito County. San Benito was down in the neutral market territory in April, and then climbed, made a huge comeback, all due to the low inventory levels. And then back to San Mateo County, finally up to San Mateo County. We see a 72% absorption rate, which is still incredibly healthy. You have to say that the single family sector is definitely driving that market. When you look at the condo and the townhome sector, it's very similar or shares some similarities with what's going on in San Francisco. People are, for whatever reason, the inventory levels in San Mateo County are definitely in that same like territory where San Francisco is, where we're seeing more active inventory than we're accustomed to seeing year over year. That's all the data that we have. So fascinating, right? I want to encourage all of you to think about this critically, because I'm having conversations with home buyers, home sellers every single day, and we kind of, it's the same three questions. It's the same 3 to 4 to 5 questions. It's like, Danny, is the market going to go down, or is the market going to go up? And if it does go down, what does that mean for me? And if it does go up, what does that mean for me? If you watched last week's video, if you're a home buyer and you have not watched last week's video, I would drop everything you're doing right now, pause this video, go watch that video, because the rate that we're going right now, given the severe lack of inventory, sure, the market will correct itself at some point in time. But to believe that we are in for a crash, I'm not sold on that yet. People talking about the argument about forbearance. Yeah, I get it. Forbearance is an issue, and there's going to be a lot of people that are in a situation where they need to sell. Okay. What that percentage is right now is to be determined. I'm not sold on the fact that that is going to cause the market to come crashing down. The reason being, and we've talked about this many times, but 80% of homeowners have over 20% equity in their property. The market would have to dip over 20% in order for anything like nuts to happen. I just don't see that happening. I just don't see it happening. There is no way that we're get all the stimulus that we're receiving right now. I just don't see a scenario in which we are not provided the tools and the resources necessary to overcome that overall as a society, so that the majority of us aren't affected. I could be wrong. I really could. I like to think positively. But right now, this is what we know. Inventory levels are very low. So if you're a home seller, for Christ's sake, there is nothing to indicate that this is going to last forever, right? And so there is definitely a good, strong argument to be made for selling your home sooner rather than later. If you are a home buyer, the rates are great. That's about all the good news I have for you right now. Unless you're a home buyer in San Francisco, in which case, congratulations, you won. I would now take your time and be very methodical with the home search and get yourself a deal, because these are the kinds of situations, right? Those are the kinds of situations where I got a comment on one of my videos saying, "Hey, I'm gonna wait until the market crashes," and you won't know when the market's crashed. Right? You won't know when the correction happens, right? When the correction happens, you live through it, and then it's done. And hindsight is 20/20. So when you see opportunities and you're like, "Whoa, that's a great deal," you need to be prepared to jump on it, because that's when you make the money. Not like that's when you get the deal. It's not like, "Oh yeah, I'm going to time it perfectly." There's no such thing, right? So, anyways, I'm rambling. That's my take on all of this right now. There is so much uncertainty in the air, right? And if there's any piece of advice that I can give all of you out there is that there will always be uncertainty about the near term, right? The short term. But if you are in this market, right, and you're wondering what to think about the long term, think about this. Don't think about the rest of the world and the nation and everything. Let's talk about the Silicon Valley bubble. We live at the epicenter of what is, for sure, the tech hub of the world. Tech runs the world. We run tech. Silicon Valley is good. That's how I feel about it. Prove me wrong. I know I'm not going to be. This is Danny Gould with the Selling Silicon Valley Group. And like I mentioned before, if you're a home buyer in today's market, you want very comprehensive data. You want absorption rates, list price versus sales price, days on market, all these different things that are going to help you make the best, most educated decision on the purchase that you're making. Go ahead and text the word data plus the zip code, neighborhood, area that you're looking in. We'll get you a comprehensive data set. And if you are a home buyer or home seller in today's market, and you're trying to find what the best pricing strategy is for you, or like we said before, there's a big difference between selling your home and selling it for the highest possible price. And right now, it's a big combination of the marketing and the pricing strategy that come together and get you what you're looking for. So go ahead and text the word data plus the property address, and we will get you a very comprehensive report for your unique situation. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.